I have a lake house, and I've been interested in what if I could find a way to maybe fractionalize the ownership of that house. Like, I think people know what like NFTs are, and they see this tokenization happening. I was thinking, well, what if I could do that in a little bit simpler way?
This podcast is for informational purposes only and does not constitute financial, legal, or investment advice. Please consult a professional advisor before making decisions based on what you hear on this show.
Welcome, everybody. Today, we're going to be breaking down the passive income report for April 2025. If this is your first time joining us, grateful to have you in the room. My name is Russ Morgan. This is the Italian stallion, Mr. Joey Murray. Good to see you, brother.
How you doing?
Good, man. People ask us all the time, why in the world would you ever share your passive income? What's the answer you give them?
I'll tell you what, it's not you, it's me, is what they say. I want to constantly, because this is such a big focus and because this is so important, right? If the why is big enough, then you will run through a brick wall to accomplish it. And I think for you and I, we've shared this many, many times. Time is the thing that you can never get back. And these moments that we have with our family are so important that we got to be focused on creating passive income, turning our active income into passive income. If you and I stay focused enough to report on it every single month, that means we're paying attention to it. And if we didn't do this, what was the likelihood we'd be where we're at?
The key to tracking passive income, the benefit for not only us, but for you, is to measure progress. We say that financial freedom is when your passive income exceeds your monthly expenses. That is the game. That is the scoreboard. If you're not tracking that, you're not in the game. You're just on the sidelines watching the game. And winners keep score. We want to keep score. Not that, unfortunately, our score may be less than yours. But it's the thing that we're tracking because I'm competitive and I want it to continue to grow over time. And like you said, Stallion, if we're not tracking it, we're going to miss out. We wouldn't be getting any closer to where we want to be by not doing it. We also want to spotlight real movement, right? So just be encouraged by seeing the things that we're working on, that, it's consistent connection, it's learning, it's investing, it's taking action. All of these things lead into it.
If you've listened to our show for any length of time, you've heard us talk about infinite banking and how we were able to use that concept to create over $50,000 a month in passive income. But it's just not that easy to figure out, how does this all connect into my own personal system?
Stallion, that's why we created the passive income operating system, bro. It shows you how to turn active income into passive income. It makes all the steps come together. If you would like to get access to it as a podcast listener, we've never given this away in public before. Go to what'swhatwallstreet.com/PIOS.
So we're going to talk about kind of these 4 KPIs that we track. And in our previous passive income report, we've really mostly just focused on the investments. But I think we're doing you a disservice because the investment is the result. That's the passive, if you will. We talk about you have to get active in order to create passivity in your investing returns. So we're going to kind of talk about the other 3 things as well. The connections made, right? Those connections are what open up new opportunities. The knowledge gained, this is what helps us sharpen our investor mindset. It gives us new ways to thinking, which helps us expand our horizons. And then the actions that we take, there's sometimes we're taking steps behind the scenes that may not necessarily move the needle on the board for that very month, but we see those adding up over time. So Joey, let's talk about connections made, because you and I spend a lot of time doing this. This is the heavy lifting. This is the activity that people probably need to be doing in their own backyards, and building relationships. What are some of the connections that we made, and how are those, in your opinion, creating opportunities for the future?
Well, let me first of all say this to add to what you've just uncovered is the fruit of your labor doesn't happen overnight. There's all this planting, watering, tilling the ground. Like, your investment progress can sometimes feel slow. So the other reason why we need to practice looking at, or not practice, but track these other 3 KPIs is because they show you that you're making movement, even if you haven't made the investment yet. Right. And so for your purpose, we're talking about connections. And for instance, we got to meet a guy who runs another mastermind who helps specifically doctors and dentists who are looking to get out of that 9 to 5. And as we connected with him, man, the synergies that we had, we were able to share with him some of the connections we've made along the way. He's been able to share with us some different connections that he's made. And man, just being able to now take those relationships. So it's not just the one connection, it's the connection of the people, even at the second and third tiers, that now we can take advantage of.
Well, here's the thing is that we have investments that we've done that we're really excited about, right? Like these are personal things that we do. And when he asked us specifically, hey, would you mind sharing 2 or 3 of your top connections in the space? Like my community is looking for investment opportunities that we can vet. Who would be the top 2 or 3 on your list? We shared those names with him. We made those connections. Well, while that helped him, it also helped us, right? Because those people that we're connecting him with are like, oh, wow, like I'm on their top 2 or 3 lists. So when there's a deal, a real deal, like one that they're like, man, I only have a few slots for this, because the reality is people who have really good opportunities, they really don't need much money. They got all the money that they need because they've got the people who've been investing with them for 5, 10, 15, 20 years.
Right.
So when those opportunities come, if they have an extra slot, they're going to think of a few people that they're going to reach out to. I want that to be you and I, right? Like I want to be the ones that they're like, here's my pocket deal. I'm not publicly raising for this, but because of our relationship, because you guys have made such an impact in my life by connecting me to other high-level people, I want to be able to give you access to this deal. I think that's huge. Connections, it's all about relationships. They say your net worth is your network. So true. Another connection we made was with a group that's got, millions of followers, right? Like being able to connect with the CEO of this company and others within it has given us an outlet, an avenue for not only us to share what we're doing, but also then to get into that network, right? When you're starting working with, these private equity firms, and you're starting to, you're trying to figure out exit opportunities for your future entities and the current ones that you have, you need to be rubbing shoulders with people in those worlds. Like if you say, I want my, the rooms that I'm sitting in and hanging out with, I want the aspirations that I have to be the daily accomplishments of those people. Well, that's one of the connections we made. Like we've been rubbing shoulders this past month with people who've had some serious exits, who are part of some big private equity and venture capital groups that give us opportunities. These connections, I think, are huge. That's why we measured this, and we don't talk about it all the time. But I think, yeah, it's fun for us to share this. Talk about knowledge, right? Like the things that we learned this past month that are going to move the needle.
Well, I'll tell you, for me, this is really kind of like an aha, but it was a duh moment at the same time, right? We talk about estate issues, we talk about emergency plans and things around protecting our wealth in our mastermind. I actually just attended an estate planning kind of legacy 100-year plan intensive for our mastermind in Utah. And this topic didn't even come up in March. But in April, I was talking to our family office about the fact that my daughter's now 19 and all this. And he just brings up the very simple question, well, does she have a living will? Does she have a power of attorney? Does she have any of these medical directives or anything like that? And I'm like, I don't know about you, Russ, but I was kind of like, well, she's 19. Why would she need all that? He's like, but you don't understand is if something were to happen, emergency situation, you show up at the hospital, they literally legally cannot allow you to speak into the situation. And I'm like, whoa, had no idea. I mean, it just that invisible line between 18 and 19, all of a sudden she needs all these things. We're able to, in a matter of days, get that accomplished. But man, that was a big, like, I'm so glad we got that covered now. Just peace of mind.
Well, here's another thing for parents who have set up the infinite banking system and now your kids have become of majority age. Most people don't know this, that when the insurance policy is issued on a minor child, there's a rating just specifically for minor children. But once they become 18, they actually have the ability, assuming they're in good health, to have a medical exam and improve the rating on the insurance policies that they have. And here's what will happen. The dividend, if the rating is improved, will increase. So the return on that insurance policy gets better. That's a thing that people forget when they set up insurance policies on minor children. They forget when they become of majority age that there is an opportunity. Just give them, and the beauty of it is you could do that for free, right? Like these insurance companies will typically pay for that stuff for you. So this is a really beneficial thing. I think if you have an insurance policy, your child has now become 18, 19 or older, and you had that policy from the beginning, you can go back there. I want to share one nugget, right? We have a passive income mastermind that, has some of the highest level, highest quality people in it. And within that group, we have the privilege of meeting several times virtually a month and a couple times live in person. We had a guest that shared something that I felt like, if it's all right, I'm gonna take a piece of it and share it with the world here. He said, I want you to identify the level 10 problems in your life, whether that's health, wealth, family, or personal. And I want you to be honest. Are you putting a level 10 effort into solving those things? Here's where he hit me. It's like most people, and I think I might fall in this criteria in a few of these categories, are putting a level 2 effort into level 10 problems and wasting energy on level 1 issues. So here's your opportunity. Take notes real quick, or just record this. You go back and listen to it. Is that categorize from your personal, health, wealth, family. What are the biggest problems in each one of those areas? And actually rate them on a scale of 1 to 10, with 10 being the worst, right? And then rate your current effort level towards solving each one of those. This is going to reveal to you where you're misaligned and where effort needs to be reallocated. And I think from a just efficiency level, right? Like we tend to not get things done, not because we don't know what to do, but because we have misalignment in all the things we're trying to work on. We can only do so many things. A confused mind does nothing. So having clarity of what we're supposed to work on. So if you do this, you put it off to the side, you have a little time in your day, you go, okay, I want to go work on that thing. You know what exactly it is to work on. That's one big upgrade that I took away from last month. I'm going to share another one. We learned a couple things about how to fractionalize a home, Stallion. Like I have a lake house, and I've been interested in what if I could find a way to maybe fractionalize the ownership of that house. Like I think people know what like NFTs are, and they see this tokenization happening. I was thinking, well, what if I could do that in a little bit simpler way? What if I could sell a fraction of that house, because we don't go down there, but maybe like 20 to 25% of the year, but yet I pay for 100% of it. And it makes me feel like I'm being a bad steward of the money, right? It makes me like go, what else could I be doing with that cash? But I really don't want to give up access to all of it. I want to have some ability. So I started thinking about this, and somebody introduced me to this site called Picasso. And it is a group of like the former executives with Zillow who created this fractionalized luxury second home market. And I thought, oh, I wonder if I could do that. I wonder if I could like do that on my own. So I went down this pathway, down, as you know, like building spreadsheets, speaking with attorneys, like coming up with a way to do that. So I built out a model of how I could fractionalize my home. I even use AI to help me do a lot of this. I used AI to read the covenants of the HOA I was in to make sure that I could do it without wasting a bunch of time. And I felt like that was huge. One last thing, I know we'll jump into the investment report we have, but the other one is premium funding. And this probably applies to 1% of you listening. But if you have a business that's worth $25 million or more, or you have assets like, homes, buildings, things that you own, but may not be liquid, right? But you have a net worth north of 25 billion. Here's a concept. I want you to reach out to us you can go to what'swhatwallstreet.com /free call. And one of our teammates can get you on the phone with one of our coaches to discuss this. But there's a strategy in which you can actually leverage those assets to be able to get a loan to fund an insurance policy, fund the loan proceeds and the carrying costs of it for a period of time until you have an exit.
There was nothing worse than walking into class when you're in school and the teacher saying, "Pop quiz day." Why? Because you were unprepared. Are you unprepared, though, for financial freedom?
Don't be. Find out how close you are by taking our 30-second quiz at wealthwithoutwallstreet.com /quiz.
This is for the person, I think it's either A, older, don't want to sell assets, going to need a huge death benefit in the future and want it to be permanent and don't want to pay cash flow out of pocket, or B, is going to have a large windfall, going to sell a business, sell a bunch of assets, and are going to want a place for that capital to go. Premium funding. That's a term that you can Google if you want, but call our team and we can talk you through exactly how that applies.
So I think there's always more. I mean, the fact that we came up with these kind of things that we all learned in the month of April, that's probably a fraction of what we actually learned. But just if you do this yourself, just think back. What did you take in the month of April in the way of knowledge, in the way of connections? And then let's look at what as far as you have in terms of your investing. So let's break down for Russ real quick the different investments, how they performed in the month of April. As you look at the very bottom of the report, you can see that we had a total of almost 57,000 of income, with 16,400 in expenses for a net of 40,472. This is across 23 different income streams. The top performer, again, our land business. If you haven't checked out the landgeek.com, you need to go check it out. This is the place where we learned how to buy raw land at 20 to 30 cents on the dollar, turn around and sell that same piece of property on the retail market for owner finance terms, and turn those finance terms into note volume every single month that continues to increase. That one individual income stream has netted to us $23,262 this month. What are some of the other standouts, Russ, that you want to talk about for this month?
Well, I noticed some dogs on here.
Yeah, well, let's talk about the dog.
Yeah, your Turo's turned around in a negative way.
Man, yeah. So let's talk about Turo for a second. Number one, in the month of April, I actually forgot about this. We sold the minivan.
Yeah.
Cousin Eddie Jr., as we called him. He went out to pasture, and actually interesting enough, just to give you some feedback on this, when I put the minivan on Turo, it was almost 2 years ago. It was about 22 months ago. And when I did that, I could have sold the van retail about maybe $14,000 to $15,000. Okay. That was like the Kelley Blue Book retail kind of cost. Fast forward over the course of those 20 months or so, 22 months, it was averaging, and I need to do the exact math on this, so I'll report back on this exactly, but it was averaging around $600 per month net after paying all expenses, including the management and operator. I was then able in April to sell that minivan for $9,750. So almost $10,000. I turned around and took that money and bought a Hyundai Sonata for $7,750. And in the month of April, so I lost the revenue from Cousin Eddie Jr., the minivan, because it was sold. And I did the startup for the Hyundai, which means there's an upfront fee to do that. There's licensing. I had to get, the tag set up. I had a gap of time for all that. So there's just a lag in terms of the actual income that's going to be showing from that vehicle. So I'm showing a loss here. Yeah. Across the 3 vehicles I have, it shows a negative, let's see, 829.91. But I am confident that they are all 3 being heavily rented right now. The other 2 were in like the 27 to 29 day range in terms of the number of days that they're being rented. So I feel really confident that it's going to turn around, but that's the story behind it.
I noticed that 100 Unicorns is still on here, losing money. Thank you, 100 Unicorns, for our monthly shout out to
Hey,
worst investment of Joey's career that Russ won't let him get over.
hey, just trust me when I say, yeah, I'm slow and steady, bro. I am the tortoise, and I will come for you. 100 Unicorns will come for you.
Yes, I anticipate a horn in the butt there.
Get ready, because we've
Yes.
got products coming.
Okay, your digital websites, those are doing pretty good. I like that. I see some progress on content sites. Looks like between all the sites you got about $1,500 a month.
That's right. Right now, Earthly Go was just over 1,100, and the other 2, the Cake Deckers site and the Gardening Dream, both of those 2 have really started to come back because they had a little bit of a lag when we took ownership from the YouTube had to switch over to us, and there's a little bit of a lag there. But man, we've got an SOP that we've got 2 virtual assistants running right now in the background, and they're just churning out new content on those sites. And so, man, we're on an upward trajectory with those things, and we haven't even added affiliate income to either one of them. So just in case you're listening and you don't see this, in the 2 sites that are now showing $405 as a net income, I put $15,000 as my portion into those 2. And I have a partner who's the operator. And so he gets 60%, I get 40%. That's my 40% is the 405. But man, we are collaborating usually once or twice a week, just for a little bit of time to talk through strategy, to talk through what's the needs of the business. And then he's executing with the staff that we're putting together over time. So this is kind of how it's working. And we're continuing to use new AI tools and things like that to enhance it.
I want to talk a little about the last KPI that we have. So we talked about the connections, the knowledge, the things that we've learned, obviously the investments that we've made, but there's been some action that was taken in the month of April. What was one of the things that you did in April?
So one, I sold my condo. Finally, after 21 years, Russ, we were able to sell the condo that really never made a whole lot of money. Let's face it, it was never designed to be bought as an investment property. So that's number one lesson is you buy a house for your own primary residence and you haven't thought about it being an investment property. It doesn't always work out as a really good investment property. So for the longest time, it was either making a little bit of money or sometimes losing money based on either the rent rates not being high enough or the association dues going up on me or what have you.
I think what you shared this is that it was a condo and condos haven't kept their appreciation in a, non-vacation market the way that traditional single family standalone buildings have, right? So like that was a lesson that you learned. I think that that's a good thing to teach our kids, right? Like maybe don't go buy a condo. Condos are not necessarily going to keep up with the market the way a traditional home. But you made how much money over the period of 20 years?
A little over $50,000.
Hey, dude, don't discount that. How much out of pocket did you have to put into it when you bought it?
When I bought it, this was back in the day of the 80-20, 100% financing. So I had no money into the deal to begin with, and it was completely renovated when I bought it.
So zero money out of pocket, and pretty much the whole time that you owned it, someone else made the mortgage payment.
That's correct. Yeah.
So, I mean, the only issue is that you didn't have 100 of these. If you had 100 of them and you were selling one every single year for 50 grand, you probably wouldn't care. You'd be like, that was a good deal.
That's good.
The thing about it is this is the investor DNA. Joey, like me, has a little more interest in excitement. But if you are the slow, steady, like very analytical, methodical, having that would have been great. You just would have wanted more. And I think that there's a good understanding of the assets that we own. I think you've been wanting to get rid of this because it wasn't creating the opportunity, right? Didn't have as high of a ceiling as you would have wanted with your money.
That's true. And knowing what I know now, as opposed to 21 years ago, I know now what I can do with that money at a much higher, cash flow per month than leaving it locked up in that equity of that home.
Trap, he could have literally, based upon this spreadsheet, he could have bought, an infinite amount of 100 unicorn site. He put zero money into this property. It didn't lose money. It ended up paying him $50,000 on the back end on the way out. As compared to 100 unicorns, Diane, correct me if I'm wrong, but it looks like you put in 30 grand. And I don't really think that that's probably keeping track of all the money that you put in it. It's lost money every single month. And right now you would have to pay someone to take it off your hands. Like, because in order to close this thing down, you're going to have to pay accountants. You're going to have to pay attorneys, all these things to just shut the thing off. I think that you could have done something differently. And I'm just glad you didn't.
Man, thanks for that, Russ. And remember, I'm coming for you.
All right. Here's another thing we did in the month of April is you've heard us talking about that we are acquiring other businesses in the insurance space. And a part of that is raising funds to make that happen. So we raised a little over $4 million in the month of April for the acquisition of some of these businesses that we're buying. And people ask us, hey, how do I invest it with you guys or in you guys, whatever. And most of the time I say, well, it depends on your investor DNA. If your investor DNA is a high I and you're excitable and you're looking for huge upside, you don't want to do that because we don't have an opportunity for you. But if you like a slow, steady, boring, 8 to 10% every single month payout, then and you're an accredited investor, go to wealthwithoutwallstreet.com. Go send us an email at info@wealthwithoutwallstreet.com and just in the subject line, put accredited and say, give me more details around the debt fund that you have. And we'll gladly get on a call with you and share those details. But in the month of April, we raised almost $4 million. We're getting ready to close on those businesses here in the month of May, and excited that we have another one under contract right now. And it's going to continue to acquire those businesses, and they're going to start spitting out some passive income on the side for us.
That's right. Another thing that we took action on in the month of April is you heard John Wilker on our podcast, thesimplestbiz.com. In fact, if you want to learn more about this, if you go to wealthwithoutwallstreet.com/thesimplestbiz, you can actually learn about the pallet flipping or pallet recycling business. This is where you go and you purchase, you pick up pallets from places that don't want them and turn around and sell them to businesses that are trying to buy them at a discount, right? And rather than paying full price for a brand new pallet, they would love to have a recycled pallet from somewhere else because they're just moving their product from point A to point B. Well, I got so inspired by the idea, I went and purchased the course myself and started going through it, not with the intention of me personally doing it, but just to understand the business model, understand the challenges, and understand how to structure the infrastructure for this business so that I could go hire the proper operator to run the business. And good news, as after taking that action, I've identified somebody and we have already started the process of getting that business up off the ground. More to come on that, but that was some action that I took in the month of April.
I love it. Nothing like Stallion taking another course. All right. we've shared with you today connections, the lessons, the knowledge that we're learning, that we're still learning, right? Like we continue, failing forward. Some of the investments, what the results of those were, and the actions taken. I'd love for you to just tell me one thing that you learned in the month of April, right? You don't have to talk about actions that you took or connections made, but what's one thing that you've learned, whether it's from our podcast or another, in relationship to building passive income or reducing your monthly expense? Wherever you're listening to this to, just hit comment. And that way, one, I know that this is resonating because you're listening, but give us a comment. Tell us one thing that you learned in the month of April. Help us be inspired by that lesson, because it's probably something that we need to go learn as well. Thank you, Stallion, for being such a good sport. Let me pick on you. You didn't give it back as much today, so I expect it the next time. Thank you for listening. Have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand, so that your wealth will never run dry. See you next episode.